Average True Range, ATR. In this video you will learn what the ATR indicator is, what the ATR indicator shows, how to use the ATR indicator. The Average True Range Indicator, or ATR, is a graphical representation of how much an asset's price has moved over a period of time. How much an asset's price moves can also be called its volatility. ATR can help you to predict how far the price of an asset might move in the future. This can be helpful when deciding where to place stop losses and profit targets. It is represented as a form of moving average, normally calculated over 14 historic periods. The setting can vary, however, depending on your own personal strategy. The ATR value tells you the range in pips that the price has moved over the given time frame. As an example, an ATR reading of 0.0065 with an ATR setting of 14 indicates price has an average volatility of 65 pips over the last 14 periods. This in turn indicates that you can expect price to move 65 pips on the current day. Of course, the volatility of an asset can rise and fall. When volatility is high, the ATR line will rise, and vice versa. It is important to remember that the ATR indicator does not show you which way price is moving. You can use the ATR indicator to determine how far from your entry a stop loss or profit target should be placed. To use the ATR for profit target placement, you should look at the indicator's reading when you enter your trade, then place your profit target an equal amount of pips from your entry. For example, if as you enter a long trade the ATR reads 100 pips, you should place your profit target 100 pips above your entry. The reverse is true for a short trade. To use the ATR for stop loss placement, you should look at the indicator's reading when you enter your trade, then place your stop loss an equal amount of pips from your entry. For example, if as you enter a long trade the ATR reads 100 pips, you should place your stop loss 100 pips below your entry. Again, the reverse is true for a short trade. Using ATR in this way for stop loss placement allows you to avoid any market noise. You can change the setting of the ATR indicator, but it is important to remember that doing so will affect its sensitivity. As an example, imagine your ATR is set at 14. If you change the setting to 10, this will reduce the amount of periods on which the indicator bases its calculation. This will make it more sensitive to price movements and produce a choppier ATR reading. Conversely, if you change the setting to 20, this will increase the amount of periods on which the indicator bases its calculation. This will make it less sensitive to price movements and produce a smoother ATR reading. If you change the settings of your ATR indicator, you should always check what impact the change has on your results. To do this, after you have made the change, log a series of your trades in your journal and compare them with other ATR settings to see which works best. So far you have learned that the ATR indicator can be used to set stop losses and profit targets. It measures the volatility of the price of an asset over time. Altering the ATR setting will increase or decrease its sensitivity to price movements. You should manually backtest any changes you make to your ATR indicator to check their effects.